No matter the strategy you trade, we all know that what top-down analysis is very important when it comes to trading. Be it whatever thing you are trading at, the top-down analysis is very important because top-down analysis actually helps you see the whole market overview and helps you make more informed decisions in the market. And for that reason, in today's video, I'll be giving you a complete breakdown on how you can actually do top-down analysis. Now, this system, I'll be showing you how you can do top-down analysis in a supply and demand method. Now, despite being about supply and demand, this doesn't stop you who trade fair value that have other blocks and other systems not to implement it because top-down analysis is the same all around. What changes is basically the levels you identify in the market and the levels I identify because whether you're trading breakouts, whatever strategy they are there, top down is very important. So guys, to this early side, I'm not taking much of your time. Let's get straight to today's video. Let me share with you a step-by-step guide on how you can actually do a complete top-down analytics regardless of the strategy you are trading. So let's get down to business.
So guys, before we proceed, let's give a big shout out to our today's sponsor, lightfinance.org. Lightfinance is one of the best trading platforms out there, boasting over 4.3 rating on Trustpilot, which means that what they are highly positive and users have positive view of them. And they offer one of the best and easiest trading platforms out there as well. So basically, when you come over here, you have access to MetaTrader 4 and 5, CTrader, so forth and so on. And they offer some of the best spread, which is as little as 0.0 spread for some trading pairs. And also has the fastest execution when it comes to trading. On top of that, they offer over 600 trading pairs ranging from forex, stock, commodities, cryptos, and so forth and so on. And to top it all up, it's even advisable for non-good traders to actually use, as they offer copy trading, which is a way for you to actually make profit without having to know how to trade. All you basically have to do is simply copy already profitable trade on their platform from other profitable traders, and you can basically be making profit on autopilot. So hello guys, now that you're on my screen, let's get straight. Let me share with you how to actually do this top-down analytics. Now here is a trade I actually had on Euro USD, and I'm not going to use this trade for the tutorial. Let me just use a fresh different chart for it. Now, so this GBP chef on the 30-minute time frame. Now, those of you who follow me, you know that what I strictly trade the 30-minute time frame, and that is where I belong. However, before I get onto the 30-minute time frame to make my decisions, I start off from the daily time frame, which actually helps me have a better view of the market. Now, this GBP chef, and we need to start from a daily time frame. Now, in order to start from a daily time frame, that is basically coming over to the daily time frame first. Now let's take a look at it on the daily time frame. Let's see what exactly the daily time frame has to prove to us. Now, when it comes to trading the market and top-down analysis, the main purpose of analyzing the market from a higher time frame is first of all to know the market direction, because the greatest mistake you can do as a trader is trading against the higher time frame direction of the market. So since the higher time frame direction says yes, then you have to do yes. If it says no, then you have to do no. Now in this scenario, let's take a look at it carefully. We all can clearly see that what this market recently broke an area of support. Now here we have a support here. We can see that the market recently broke this area of support and they came back to retest it again. Now it's selling off. Now this is a clear evidence that what this market is now a downtrend. Now, if you are someone who doesn't have an idea about support and resistance, but I believe you definitely have an idea about market shift, which is change of character and all of that. I believe that should also prove to you that well, at this point in the market created a major change of character. You can see the market created a major change of character. Now with this, you have two clear reasons to actually prove to yourself that what the market is actually a downtrend. Now, since the market is a downtrend, what do? We can't sell it immediately right now. Now, this is why top-down analysis is coming. Now, the next thing we need to do is simply we need to go down to a lower time frame to go look what the market is doing there, because if the lower time frame direction are changed and the market is now attacking a daily direction, then we need to be very careful as well. So what we need to do is simply on the daily time frame and at the time frame we are going to take our trade, they should be aligning, like basically they should be looking alike, so we know that what we are in the safe side in the market, even though it's not 100% safe side. Now I'm going to get this off. Now the next thing we need to do is simply come over to the 4-hour time frame. Now what we need to do on the 4-hour time frame, now on the 4-hour time frame is basically where I mark my market shifts, which is my change of character and break of structures, before I go down to the 30-minute time frame, which is where I refine my supply and demand levels to take my entry. Now, if we should look at the 4-hour time frame, we can clearly see that what the market is unable to sweep out this week that it printed here. You can see the market couldn't sweep out this week that it printed here. Now, this shows that what the downtrend is still very strong in the market, and that's why the market is unable to get to this particular high over here. So this is an evidence, and on top of that, we can see that what the market actually created a break of structure below here as well. Now, we have two clear reasons to prove to ourselves that what the market is actually a market that we should boldly sell as traders. Like, basically means we can boldly take sales in this market. So now that we have that confirmed, the next thing is simply I'll go down to the 30-minute time frame. So now that we're on the 30-minute time frame, what we need here is simply marking our key levels. So since the market is a downtrend, we are looking for supply levels, which is areas that we want to sell from. And if the market was an uptrend before, we look for areas to buy from. Now, in this scenario, we are looking for areas to sell from. So I'm going to mark my supply levels. Now, firstly, we have a supply level right here. And then right on top of this, against the level whereby the market made a shift, we have another one right there. Now, this shows that what we have two different levels in the market. And since these two levels are close, based on my trading rules, I'm going to delete this one off and then only focus on this one. However, I will need to cover these wicks at the top here. Now, what this actually means is that what I have confirmed that the market is a downtrend. Now, since I have confirmed, now on the 30-minute time frame, what I need is an evidence to prove that the market is still a downtrend. And so far, we can see on the 30-minute time frame that what we had a market shift to the downside right here. We have the market shift right here. And then over here, we had break of structures. We had a break of structure right there. And then another break of structure right here. Now, this is a clear evidence that what the market is on the downside, so we should only be looking for selling opportunity. And to top it all off, we have a level here, which is a great level for us to sell from. And on top of that level, in front of it, we can clearly see that what the market also created this area here, which is more like an area whereby the market came to test recent low. So basically, I'll mark it as my liquidity level, where the market broke below here and I came back to retest. Now, I can mark it out for you as well. You can see the market broke below here, which is where I created the market shift. And then now, it came back to retest it with this wick right here, right in front of the market shift, which means that what this place is a clear area of liquidity, as a lot of people might be looking for sales in this area, or even if not selling from this area, a lot of people will be looking to sell from this other demand, this other supply right here. So now you guys see that our top-down analysis is not really that complicated. It's basically knowing what you are looking for on the time frame. Like, basically, let me look at how many minutes it took me. So it took me about 9 minutes to let me just say about 7 to 8 minutes, because I first made a mistake whilst recording, so I had to go back. So basically, it took me about 7 to 8 minutes to decode this whole chart for you, and it was basically this simple and straightforward. On the top-down analysis, on the daily time frame and the 4-hour time frame, just decide where the market is moving to. And now on the lower time frame, you go identify your key levels, you mark your entries, and you are basically good to go.